How's everybody doing? Okay, guys, well, welcome. It's the 26th of May, 2013. Again, I'm not making any trade calls or recommendations. This is 50 pips, and I'm just doing a little outlook for the week here. I hope everybody's had a great weekend. And again, I'm not making any trade calls or recommendations. Everybody's responsible for their own trades, and the fact they're in here means you've read, you understand, and you accept all the disclosure disclaimers here on the website. So, what can we expect to see? So first of all, keep in mind that Memorial Day weekend in the States, so US and UK are closed for Monday trade. So we could see we don't have a lot of data, so a bit of a quiet start to the week. What I wanted to go through is a couple of charts, not that many interesting charts, but I'm also going to cover Aussie and Kiwi this week because a lot of people wrote to me asking me to look at them, so we'll just take a quick look at them. So first things first, just in terms of gold, what's going on gold? Just a quick one. We're hovering here, so I just, we talked about the fact that even though we had a lot of an aggressive move down, we had this very big move down. You have to keep an eye on the technicals, right? And what happened here is we printed a higher low, and then we started to rotate back up. What happened here? The bears had a chance to sell this retracement right back down, and what's happening? Basically, the 1350s are catching a bid once again, and we have the similar kind of pattern where we're putting in a higher low. Okay, so going into the week, the range we're looking at is still 1450, 1400, and 1350. So keep in mind it could be chop here, but really you can see how this level is being defended. It's all going to be about the 1400. So daily close above or below will be bullish or bearish, the way we'll look at it for momentum, right? But keep in mind also that to get more of a bid tone back into the pair, if you look at this on the weekly, right? We talked about this 200 on the weekly. We really need to see price closing back above that high range, which are those 1450s. Okay, so really pressure on as long as we close below those 1450s, but the intermediate trading range here is 1450, 1400, and 1350. Okay, so I'm going to go through some of these quicker ones which I think are a bit less interesting to me, but a lot of people are looking at. So Aussie, what's going on Aussie? So after we had this aggressive move down below the 200 DMA, so very technical really, we break down below 200 DMA is broken, we move back up, previous support acts of resistance, gets sold, and bam, very aggressive liquidation all the way down. This has been holding at highs for a long time, so it's not surprising to see some liquidation. In a normal healthy market we would have expected to see some kind of a bounce, but just this is just highlighting the move and the fact that we're at highs for so long, the market caught positioned off guard. So going into the week, what you really want to watch here is how we behave in this broader zone to the downside. If you look at it on a weekly, it becomes much clearer, right, why this bottom broader support zone is so important. And the support zone I'm talking about, if you want to draw it back on your chart, is basically this whole 98.40s into these 93.90s, so you can call it 94s. So it's a big zone, but keep in mind this is a weekly. So you see this has been very interesting because resistance, support. So it's a really important zone. So broadly speaking here, as long as we hold here, the risk is for a continued move down into these 93.90s, so 94 level, but this is going to be very, very strong support. Okay, to the upside, the parity is still the main resistance. However, unless we close on a weekly back above this 200, this is going to continue to trade heavy, likely to trade heavy. And on a daily chart, what I would be looking at going into the week again is we've got that downside remains those 93s we talked about, 93.90s we talked about. To the upside, 98.40s, parity, and then this big breakdown level are levels to keep in mind. So I think a lot of people were writing to me asking about, do you think we're going to get a test back in the 200 DMA on the daily? I mean, I think these are much more important levels to focus on now, because it's very heavy. But clearly, if this bottom support zone, there's a chance, but there's other resistance levels I'd keep an eye out short term on. Okay. Then looking at the Kiwi chart, similar, it's basing down into this support. These lows we put in last week are really important. The only thing I would say is this was a pivotal line on our chart, 80-50s. The only thing I would say is if we don't close back below these 80-50s on a daily, I think we've got a chance to see this try and move back down into back up into these 82-70s. The resistance levels interim I have on the chart are 81-30s and 81-80s, but clearly this is in the card of this these lows hold. If they break, then 79-10s are what I'm looking at. So these are the broader picture I'm looking at going into the week on Kiwi. CAD, what's going on CAD? So we've broken up to the upside, and it's really now, it's still about those 0270s in a certain sense. So we've broken back, we've taken out these stops, you know, very tempting. Once we break, we start to close above the 0270s. We talked about the 0270s for a long time, the fact that the market was unable to close above. Once we started to close above, the stops above these highs were very tempting, and the market's just taken them out. What's happened is that right after we've taken them out, markets becoming unable to hold new highs, unable to hold those highs. So new sellers coming in are profit taking, and we're pressing back down. So the thing I would look at is now these 0270s are coming in line with also this previous resistance descending trend line that should act as support. So keep in mind that even though this level can be tested, as long as we don't get a daily close inside or below, likely we're going to trade with some kind of a bid tone here, and the focus is going to be to try and take out these highs again. Okay, if we take out these lows, then the level I'm going to be focusing on is 0150. So the level I'm still looking at here, the way we're trading is mid-range, because we still have to confirm this breakout, is these 0270s to the downside, 0150s, and to the upside these highs with a potential to go into these 0440s. Okay, that's what I'll be looking at in terms of CAD. Then another chart is this Euro JPY. So Euro JPY, we've been talking about the 132s that have been pivotal for so long, and what's interesting here in terms of dynamics, let me just clear this up, is the fact that we're holding this dip we put in the other day. So what I would just say is that as long as that, oops, I didn't mean to do that, I can't remember, I think this was where the line was. As long as we hold this and these buyers are still coming down here to support, I think, you know, the 132s are going to be attracting, and they're going to remain the pivotal level. Now, if we start to get a daily close below these 130.40s, then I think what's going to come into play is some further profit taking, or some more pressure on to move back down into this trend line and into those 127.90s, 128s. But should we go into the week and we get a test of these 132s and we hold above them, you know, the rotation's still in play for 135, so broader range, 135 to the upside, 127s to the 90s to the downside. I'm still looking at these 132s to be the pivotal level to watch for the week. Okay, bull bear line. Aussie, we've done that. So we've got Euro and cable. Let's take a look at Euro and cable. So what's going on let's do cable first. Cable, this is a chart we posted during the week when we pressed back down into that, make this bigger, back into this 50.39 into 49.80, and we said this is a really important support zone. You need to keep this in mind, because after aggressive moves, we found this was a basing zone. This is a place where market was uncomfortable breaking and holding below, and this is a zone that found a lot of bids in the past. So we came right back into here and we held. Now what I need to see is I need to see a daily close below 92.80s for this to be pressure on, and then I'd expect us to try and go back down and test those 43.30s and 48.30s and 48s potentially quite quickly. Okay, but the way we're trading here, the fact that we held here and we talked about the 51.00 on Friday and we closed above, as long as we keep on having daily closes above this, I think the path of least resistance, at least short term, is to try and test these 152s. Now if you go back even on a 4-hour chart, you can see why we have these double lines here, and these 152s are so important. They've been so important in the past, both as resistance as support. So that's definitely a key level to keep an eye out for. So going into this week, right now it looks to me like the path of least resistance for a bit of a more retracement back into here. This is going to be the big pivotal level for the week, as far as I'm concerned, and that could really try and see a bit of a shift in tone. So as long as we hold below here, then it's going to continue to trade heavy, and we've got all those levels on our chart. If we start to get a daily close above this, then I think the 153 test is on the card. So 153, 150s, and then we've got this broader support zone. So that's what I'm looking at in terms of cable. And last but not least is the Euro chart. So we've been talking about Euro for quite some time, and what I've been yapping on about is basically that some people have had a bit of an issue with it, but what I've been saying is basically that this isn't a broader range, and this is that's just, we've been playing 132.00, 130.00, 128.00, right? So we got 200 pips to the upside, 200 pips to the downside, but it's been much to do about nothing in terms of the broader chop in this area, right? We've seen this 130s being pivotal for momentum, both to the downside and to the upside, but we keep on seeing the 128s protected and the 132s protected. So what we said is, don't get confused with velocity inside this range. As long as we don't get a daily close above the 132.00, the bears are still they still have a good hand in pressing this down. They won't be into, let's say, in serious trouble short term and in inverted commas, right? And the bulls, as long as we don't get a daily close below these 128s, right, then, you know, the bulls are not really under short-term aggressive pressure, right? What's happened here, and this is the way we're looking at it going into the week, you know, this was a bull-bear line for a break and a move back down, or a bounce for a move back into the 130s, and we got that. And now this 130 is bull-bear line for the week, below pressure for into the 128s, above pressure for a move back up into the 132s, okay? If you look at it from a 4-hour perspective, you can also see that, you know, the scenario in terms of action for the bears has been almost textbook, right? Difficult, you know, what's happened? We come back in, sold off aggressively, the mid-range, right? Top, mid, low. Mid-range gets bought, bam, we press into these highs and we make new highs, right? So the bulls have got a chance here because this is a very technical setup. Test high range, bounce at mid, and we make new highs even though we can't hold high range. And what happens here, we come back down and once again, bam, 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 higher lows, and the bulls get a chance to press it back up, and this looks so far, this looks like perfect action for a breakout and a daily close above the 132s. But what happened, the bears come in and they press it very aggressively down, sold, and as we're moving here at highs, you know, Bernanke, non-Bernanke data, whatever, let's just look at the levels, we press back up very aggressively and these 130s get defended hard, right? But what happens here, they get pressed down and we make higher lows, and we're back here. They're defended once again, and we're hovering at highs. So the bears are doing their best to defend this level, and there'll be a lot of bears that probably haven't covered yet, and they're trying to add to their shorts to keep this technical pattern for a break down to the downside below the 28s, then into the 125s, etc., 118s ultimately. But here, so far, it's not gaining traction, right? So what you want to look at going into the beginning of the week is the bears want this to hold below. If this whole closes, daily close above 130, then I think we're looking at a retest of 132s. So again, that's my scenario. It's still big chop inside this broader zone, but you know, you have just, those are the levels you really have to keep an eye out for, and keep an eye out how we behave on a closing basis around those three levels, 132.00, 130, and 128.00. Okay, so I hope that was interesting. I hope everybody's had a great weekend. I hope everybody has a massive extended weekend if you're in the US or UK taking 3 days off. And again, don't be shy about sharing the content if you like it. I'll see you guys. I'll be around tomorrow. Have a great day. Have a great evening, and talk to you guys soon. Thanks for listening. Bye-bye.